Hey, good evening, everyone. Sam here. Thank you very much, Mr. Darrell. How awesome is that to be introduced by the best voice in the game? That does not get old. Thank you very much for being here, guys. I always appreciate seeing you guys after hours. I know that this is the evening time, and depending on what you like to do, it's probably not to continue sitting in front of the computer. So I really much appreciate you guys being here. I'm really looking forward to this. Basically, what I'm going to show you here in the next 45 minutes to about an hour is the product of about a decade of work that has been sharpened by my time here at Simpler. So let's get down to it. Let's have some fun, and we'll answer some questions at the end. So it's called Take the Money and Run, and you'll find out why here in just a minute. So what are we going to be talking about today? Well, if you've been in the gold room with us for any amount of time, you've heard me use this concept of smiles and frowns. I didn't really think this would catch on. I didn't intend for it to catch on, but it's a very easy way to talk about the strategy. So what we're going to be talking today about today is smiles and frowns. A couple of other caveats, we'll get to those, but that's the main point of it. And really when I started working on a trading strategy, I always felt that the best strategy would be one that works regardless of the account size that you have, right? If you have a small account or if you're a hedge fund manager, I think that the best strategy would be one that works regardless of the situation. So that's kind of the initial seed of the idea, if you will. The primary focus that I have for myself and that I'll have with you guys in the class is repeatable percentage growth. And that's something that you're going to hear a lot about in this presentation is percentage growth. The way that you get from a small account to a big account consistently is through percentage growth. So in my experience, I found a strategy that can be applied to any market. So that's super important, right? Regardless of what you trade. I primarily trade options, but if you trade stock, if you trade futures or marshmallows, it works on any market, on any time frame. That's really important as well. So regardless of the lifestyle that you have, if you have the luxury of sitting in front of the computer every minute of the trading day like we do here, then you can trade it accordingly. If you like to have a little bit more of a life and you want a slower approach, the strategy works for that as well. And like we mentioned, it works for any size account. So in the first slide here, I just included two pictures, regardless of which one you're in, right? So I'll come back to these a little bit later in the presentation. This account I started with $100. I mean, that's more than that's less than almost 99% of people, right? And we'll get back to that. But in about a month or so, you can see the percentage return. And let's say that you have more than $100. Hopefully, you're trading with a little bit bigger account than $100. But if you are, here's an example of a larger trade, right? So the strategy works regardless of how many zeros are in your account. It's really important to know your pitch. It depends on what type of trader you are, and really that comes down to personality and finding what has worked for you. So are you a short-term trader, kind of a day trader? Are you a multi-day swing trader, which is a really kind of good middle ground? Or are you a long-term trader? And only you can answer that question, right? So the point of it is it's important to know what kind of trader you are because it will determine how you choose to trade these different strategies. Bear with me just a second there. All right, there we go. So your pitch selection will determine how you swing at a stock. So if you're a fast trader, you're going to trade fast charts. If you're a longer-term trader, you trade longer-term charts. Makes sense? Many traders have undefined setup criteria, especially new traders. It's a piecemeal approach. I can speak to this because I was there, when I started trading as well, almost a decade ago or more than a decade ago, I suppose. And you have undefined setup criteria, right? So you'll have a squeeze, but maybe not the right structure, or maybe you have the right structure, but not the squeeze or anything else. And really, the best thing that you can do is tie it all together and understand what your setup criteria is, and then make sure that you're hitting all of those points. If you are, that's a trade. If you're not, look elsewhere. So I think it's really important to embrace the unknown. I think it's really important to kind of just put this out there, which I don't think a lot of people outside of Simpler do, and that is to acknowledge the difficulty of trading, right? It is the most difficult profession, or one of the most difficult professions that you can embark on. And why is that? Let's talk about that for a second. Well, you're going up against the collective wisdom of everyone who's trying to make money, right? So we've seen PhDs go to Wall Street. We've seen so much brain movement from certain industries to Wall Street. And that's okay, right? That's maybe the way it should be in terms of being challenging. And the markets are challenging because they are the collective psychology and decisions of millions of people. And that's how we view the markets here through technical analysis. Markets offer consistent opportunities, we know that, or constant. The cost of admission, however, is hard work and having a plan, right? So I will definitely emphasize that strongly because I didn't get here by stumbling into this, right? I fell down countless times, and you have to be willing to not only be willing to fall down, but have the fortitude to get back up. And that's what it's all about. And I really put that right front and center. And it's okay that markets are difficult. Markets are a big puzzle, and we're all type A personalities. For the most part, this type of vocation tends to attract type A folks, and chances are you're a type A folk too. And you know, the markets are a big puzzle, and type A folks like puzzles. So embrace the challenge and embrace the unknown. So who am I? My name's Sam Shames. I'm the Director of Equities here at Simpler Trading. I started trading about 13, 14 years ago, right around 2006. My focus is on options, macro, so the big picture, how it all connects and the different levers, and small to mid account percentage growth. So there's that word again, percentage growth. If you want to check out some of my stuff, feel free to, after the webinar, to go to the blog and read some of the stuff that I've written. So another version of the same thing. Who am I? Well, I thought about what to put here. And really, I just wanted to put something that kind of gets down to the point. And I think the point of myself is three points. So the older I got, the more things I felt I would care about. Maybe you relate to this. Instead, the older I got, the more I care about less things. Didn't quite work out the way I expected, but it worked out better. The only things I care about now at this point are a close circle of friends, animals and nature, quite deeply, and trading markets and the Simpler Trading band. And regardless of what side of the microphone you're on, if you're on this side of the mic, I care about you. If you're on the other side of the mic listening and you're part of Simpler, I care about you as well, right? I want us all to succeed because I see us all as this collective band. And the better, we're only as good as our weakest link. So I take that pretty much to heart, and I'm very tribal when it comes to that. And I'm okay with it because I like my tribe. So let's talk a little bit about tuitions in markets. How many of you have paid a tuition to the market in the form of a bad trade? Maybe you took it emotionally, maybe you took a trade and you really didn't understand it fully, but you were just thinking, hey, that looks pretty good and I can make a lot of money. And then it didn't work out, right? I call that paying tuition. And I call it paying tuition because it effectively is that. You will continue to pay the tuition until you, well, I call it graduating. So trading is very challenging, but it's also very rewarding. All traders pay a tuition to the market, and I mean that, right? You know, I can use John as an example because everyone knows John, everyone likes John. Even someone as good and as successful as John, at some point in his career, he had to pay the tuition, right? He had to take the bumps. So I want to share the bumps that I took with you before we even jump in. So some graduate and become profitable traders, and some never grow out of it. But you don't want to be that. You want to graduate. My first tuition to the market was in 2008 when I bought the lifetime high, mind you, the lifetime high in both Apache, APA, and PBR, which is Petrobras, both oil companies, mind you. And why do you think I did that in 2008? Right? You guys remember the commodity boom when oil was undoubtedly going to 300? It didn't. It was a very painful lesson for me and an important lesson. I was in college at the time. I was young. I didn't have a whole lot of cash in the account. So it was a really painful lesson and an important one. That year was also the first time, however, that I made six figures. So it was the first year of my trading. I started off taking some bumps, but it was also the first year that I made six figures. So from initial failure rose a vocation. And the point of that is just don't give up. We all will pay a tuition at some point. Don't give up, see it through, and try to graduate. So I give you the commitment that you will be a better trader if you use the strategies that I share with you, because I paid the tuition. I paid the tuition a decade ago, so you won't have to. And before we move on, just for a little bit of a laugh here, check that out. If you get a chance, go pull these up. Pull up Apache and pull up Petrobras. These circles are where I bought. And they'll never go back to that level. No one will ever pay more for shares of Apache or Petrobras than I did. So I have that as a crowning achievement of my early career. So I'd like to tell you guys about a friend of mine. His name's Ed. He's not a trader. He is an electrician by trade. He has his own electrician business, and he's pretty successful at that. But I think he wanted to kind of expand his horizons a little bit, and he started trading. And he had never traded before. He had no preparation, but he had a really good bull market. So he started with $5,000 on Robinhood, and he went up to $7,000 because he had a good bull market and everything went up. However, that changed pretty quickly, and he lost it. He lost everything except $1,000. So I helped him rebuild the account. He started with $1,000. I shared some trades with him, some ideas with him, some strategies, and I really just got on him. I'm not going to kid you guys. I'm the friend that will get on you. I think of that as a good friend, but I am the friend that will get on you, and I got on him. And I made him promise to start preparing more and to learn the basics of charts. And these are a couple of screenshots from his account. Now, he's taking some big swings here, right? You don't get this type of daily return without taking a big swing, but he's come a long way. Now, this is cool. Yes, making 23K in a day is nice. Making 2K in a day when you have 5,000 is nice, sure. But really what I'm really proud of is this preparation. Now you may look at that and say, well, those are just sticky notes. Fair enough, but this is a lot more preparation than he ever had before, and it resulted in this. Without this, he does not get that, and I'm proud of him. So he likes momentum stocks. As you can see, you don't get these returns without momentum. And I just taught him one thing, and the same thing that I'm going to share with you today, and it's smiles and frowns. Right? It sounds super easy. It's meant to be. It's meant to be. So he applied it to his own style, and he grew from there. And he's been doing pretty good. He actually paid for a motorcycle using the profits from his trading. So here's a little bit more about myself. I call this slide the past for good reason. So here you see somebody that was very unhappy with their job because I wasn't pursuing my profession. Right? So just kind of take in this picture for a second. Do you see this? Do you see tension in this picture? Does it look like it's a friendly, happy time? Or does it look like it's a little bit more serious? And frankly, it's a little bit more serious. I was working for a specific technology company at the time that will go unnamed. And I wasn't very happy with it. I didn't like working there. I was very good at my job. Actually, I was the #1 ranked at my job in the world working for this company, but I really didn't like it. And maybe you have a similar situation. Maybe you're in a similar situation right now. And maybe you're a doctor or a lawyer, a plumber, a teacher. Your job may be very successful, and you may have prestige, and you may make good pay, and you might be great at your job, but it takes all of your energy to do it. And why is that? At least for myself, it was because I was passionate about something else. So if you find yourself in the same situation where you have a good job, maybe even has a little bit of social prestige with it, but you're just not happy, maybe it's because you're passionate about something else. Before we move on, I want to show you something. Look where my eyes are here. Follow that line of sight. I have all the chips at the table, mind you. This guy has like 2 black chips. This guy has some. I have this stack of chips. The reason I'm so focused is because I needed to be, right? I needed to be. It wasn't, I wasn't there for fun. I was there to take their money. And I call this slide the present. And you get a different vibe, right? We're still playing. I like these 2 slides because we're playing poker in both of them, but they're so radically different in terms of the sentiment or the environment. And this was at the Simpler holiday party. You might recognize some of these folks. Here you see a happier person who's fortunate to be following their passion. And you'll be surprised how quickly things can change when you start following something and doing something that you really love. So I can pretty safely say I don't miss the past. And before I go on here, let me give a quick shout out to the folks in the picture. So here we have John's wife, John's beautiful wife, Maria, Bruce's gorgeous wife, Tammy, one of our all-star traders, Miss Allison, and myself, and one of our previous web developers. So before we jump into the presentation, I just want to share a little bit about how I see us here at Simpler. And this is just my own opinion. Feel free to have your own, as always. But this is my opinion of how I see us. I see us, it's us versus them. Like I told you guys at the beginning of this thing, I'm very tribal, and I'm happy to be so. I'm happy to be tribal. I like this mentality of us versus them. And this is how I see us. I see us as a pirate ship going after the big banks, right? And the big banks, they have the big boat, they have the best sails, but they also have all the treasure. And guess what? The Simpler Pirates, we want that treasure. And we have to be smart, and we have to be cunning, and we have to be consistent and good to take that. So I hope that imparts a little bit towards you as well. I hope that kind of inspires a little something in you that that we're this band of traders going up against Wall Street. I know it does for me. So what am I going to show you today? Let's get down to the brass tacks. So I'm going to show you smiles and frowns. And if you've been in the room, you've seen this a little bit, but I'm going to tie it all together in this presentation and then later on in the class. So momentum cycles, or momentum in general, it happens in waves, and I call it wave cycles. So what I mean by wave cycles is basically this. Most momentum on charts, if you smooth it out, it tends to look like this, right? And so you go from peak to trough, from peak to trough, and you'll actually have multiple of these, right? So this could be a 5 minute, and then you'll have it within 10, and so on and so on. But markets and momentum tend to move in cycles. And really the best time to buy is when you can time it so that all your time frames are on the same cycle. And I call that a smile, right? It ends up looking like this. Or if it's at the peak or the peak of the wave there, then I call that a frown because it ends up looking more like this. So on these charts, the cycles look like smiles and frowns on the momentum indicators. And when there is both a support or resistance level and a smile or a frown, right? So you need a level and you need a momentum structure. That's kind of the heart of the strategy. Then we have a possible setup. So this is kind of the meat and potatoes of it all. All right, so let's get to some trades here. Just before I do, though, let me jump over to the chat and see if I missed any questions. Henry was not playing that night. If he had been, I don't think I would have been doing as well. Sweet. Am I an electrician? Not quite, although I do enjoy Elliott Wave. So let's get to some examples. So I'd like to start with this one. And I like this one because we all know what happened with oil, right? So this is kind of, I call it the quintessential take the money and run setup, because the whole point of take the money and run, and I'll also talk about take the money and stay later, is you can have a short-term setup, right? So if you're a day trader, you have a setup. Now it'll be a day trader setup, but it'll be a setup for you. However, if you're not a day trader, let's say that you're a multi-day swing trader, a little bit more like what we do at Simpler, then the setup should work for you as well, right? And then let's say that you're a longer-term trader. Well, then the setup should work for you as well, right? And that's kind of the whole point of this, is regardless of what type of trader you are, what time frame you're looking at, the setup should work for you, because the idea is one setup rolls into the next. Think of like Russian nesting dolls, right? You open one up, and guess what's inside? Another one. And then you open that one up, and another one. Same idea. So with USO here, this is the oil fund. So it's a proxy for oil. It had a 4-hour nested squeeze and bear structure and momentum, right? So what I mean by that, bear structure just means this. You see how the moving averages are all aligned bearishly? That's bear structure. If the red was at the bottom and the white was at the top, that would be bull structure. So we were looking at it right about here. And we had this squeeze, and we had a frown and a frown here. Now, I like starting with this trade because I took the fast money, right? I typically will when it's available. I took the fast money, but we all know what happened with oil, right? So I took the 40% profit in the puts. We shorted USO, which is oil. And overnight, we made 40%. Not too bad, right? No sweat. Can't really call it work because most of the trade was overnight. But we made 40% overnight. However, we all know what happened with oil eventually, right? Oil went to -37. I'm going to go ahead and put that on the screen because that's unreal, right? So oil went to -37, but it started here. And so the idea is I took the fast money because that's what was available. However, if you took this trade at the same time and you just held it, you would have made a lot more. And that's the point. So here's another example of a trade. This one was on JD. We bought JD in the morning because it had momentum setups across multiple time frames. So you're going to see the same thing on all my charts. Usually I will have 4 panels here. And when I have 4 panels, the whole point of it is to understand the different time frames and how they all roll into each other, right? I want to start with the hourly and have it roll into the next, and then have that one roll into this one, and then roll into the daily. And that's the bread and butter of it. So I bought JD in the morning when it had that momentum set up. The next morning, again, quick trade, we sold it, 50% profit. I think we sold it right about here. Actually, no, we sold the high initially. And on the next hourly momentum cycle, the next day, JD continued to climb. So the whole point of the strategy is when you have a cycle that looks like this, you typically want to be on the buy side here, right? And then when your next cycle gets here and starts losing momentum, that's the end of that particular cycle on that time frame. Now, let's say it's an hourly time frame, the trade is over. You take your money. However, if you're a longer term trader and you don't really care about the hourly time frame, then guess what you do? You let it cycle through for the next swing. And JD ended up going much higher than this. Here's an example on an SPX we did in the room. And this was just a day trade. So this one was a bona fide day trade, opened and closed it on the same day. So we used the same strategies, but guess the difference, right? Because it was a day trade, we shrunk the time frames. So we made everything smaller because when you're day trading, you care about 1 minute, 5 minute, 15, and maybe hourly. If you're doing something longer, you don't care about a 1 minute chart, right? So you just shrink your time frames, but the strategy remains the same. So here, in less than 3 hours, we made 65% return on a credit. What was this? A credit spread? Looks like a credit spread. Sold it for $2.50 at 10 a.m. 2.5 hours later, bought it back at 80 cents. Now, this one still irks me a little bit because I sold it before the Fed. There was a Fed meeting that day. I sold it before the Fed, and it actually ended up going to full profit. So if I had done nothing and just held it, it would have gone to 100%. But 65% in 2.5 hours with no sweat, it's not too bad. So I don't always just take the easy money, right? Sometimes I like to stay in the trade a little bit longer. Now, however, if you're going to stay in a trade a little bit longer, usually it's a good idea to restructure it, right? To structure it in a way where, one, you can sleep at night, and two, staying in the trade actually has a benefit to you, right? And you can structure trades that way by doing a butterfly or credit spreads, things like that put time and theta in your favor. So as the passage of time continues, and as far as I know, the passage of time remains undefeated, then you actually make money. And that's a really awesome part about trading options is you can make money with the passage of time if you structure the trade correctly. So here I call this one take the money and stay. And it's a longer term setup. So this was on TDOC. I think we're all familiar with TDOC now. And I had a level on TDOC here. It was at 170. It was an extension target. And I was like, let me set something up there. I don't think it's going to get through it, but I think it's going to hang out there. And so what we did on TDOC here was we set up a butterfly, 140, 170, 200. In hindsight, that seems pretty low cost. 525 to get in. We held it for 11 days. And 11 days later, we sold it for a little bit over 100%. So we got in at 525, got out at 11. And we used the directional movement in our favor, right? So the stock had to go up. We used time, or theta, in our favor because it helps if the stock churns, which it did. And then we use vega, or volatility, in our favor because it helps if the stock goes up and volatility, or IV, or vega, or however you wish to express it, compresses. So we got all three of the Greeks correct here, and it resulted in a little bit over a double in that 11 days. So what are some of the components of the strategy? It's actually multiple components, but they all tie in together really nicely, and chances are you're already doing a lot of this. So the first thing is the smiles and the frowns, like I talked about, and really that just translates to momentum cycles, understanding your momentum. Compressions and expansions, so something we're all probably familiar with, which is the squeeze, right? So whenever you're in a squeeze, you're in a compression. If you think about a spring compressed, and then you release it, you get a big jump. So it's the same idea. Support and resistance levels. So here I just shortcutted it and called it DARVIS, which is the horizontal support levels, support and resistance, previous highs, previous lows, etc., or combined with Fibonacci work. So in the class, we're going to cover both the idea of the DARVIS levels, which is basically support and resistance of previous highs and lows, as well as finding support and resistance based on Fibonacci. The idea is all centrally tied together with multiple time frames. So you've seen all my charts have 4 panels. The idea is each panel needs to work together with the other ones. So that's a really important part. And if you want to visualize it, just think about chain reactions, right? So you start something and it triggers something else, and that triggers something else. That's the goal. Also, a really big part of my work with you guys, especially when I do the Monday opens with you, is understanding the full market picture. So I'm pretty big on this. I keep track of the market with a checklist that I'll actually share with you in the class. I do the checklist every night. It takes me about, I've gotten pretty fast at it. I can get through it in about 15 minutes, maybe 20. And by doing the checklist every night, I go into the next trading day understanding how the market is positioned across multiple really important components, right? So what does that mean? I understand currencies, bonds, and indexes, volatility, and internals, basically, going into the next trading day. It sounds complex, but once you start putting it together, it gets really fun, number one, because you're getting a view of the market that not everyone has. And then 2, it orients your direction. It orients your trade. Because if you do the checklist like I do, and you see that everything that you're looking at is bullish, you're going to have a hard time shorting the next day if you've done that work the day before. And same thing, right? If it was bearish, same thing. Or let's say that you're getting conflict in your checklist. Well, that's a signal too, that the market might be a little bit more choppy. I can't talk enough about it. It saved my butt countless times. Understanding volatility and executing the trade with the Greeks in your favor. So we'll cover that briefly in the class. It's not the central component of the class, but it is a really important part. And it's just understanding the trade structure and executing it in a way that makes sense and that puts each one of the Greeks in your favor. So here's an example on SPX. I call this one Sometimes They Hit Big, and this is kind of a throwback to the first slide. So you can trade bigger with this strategy, and this is one example. Now, this was an aggressive trade, but I also want to show you that this is an example that mirrors what happened in gold. So look where I shorted here, and this was the beginning of the crash, right? Had I held this trade, and this is another one that I'm I can't be salty about this. I made 250%, but I'm a little salty still because the idea is you can take the fast money, which I did, but the setup was good for a longer time frame. So let's talk about it. So I bought SPX out of the money puts on Friday, right? Very risky. I admit that fully. For $24 or $2,400. I based it off the momentum signals. And again, I acknowledge this was a very aggressive trade. On Monday morning, however, the market was already gapping down. This was the beginning of the crash. And you can see it here. I think, where did I short at? 33.30. So I shorted somewhere in here. And then this was Monday, this day right here. So this was the beginning of the crash. So on Monday, I was able to sell the $24 puts for $85 or $8,500 for about a 250% profit over the weekend. The magic is, and the magic here is in having the ability to take the money, which I did, or stay in the trade. Now, look at what happened here afterwards. I shorted, where was I? 33.30 put. So I shorted here. This is Monday, where I took the money. And look what ended up happening at the end of the week. Imagine if I had out of the money puts expiring Friday for that week. Well, guess what? I went back and I looked because I couldn't help myself. The puts, actually, this number is wrong. This should be 300. There were 300 plus at the end of the week. So I could have made 30 grand from a $2,000 put had I held it through. So, and again, this is the point. You can take the money here and you're not going to feel bad about it, unless you're me, in hindsight. Or if you want to hold the trade, you can take a lot more out of it if it continues to play out. And that's the whole point. So I also want to kind of swing it back to the other side of the spectrum, right? Buying out of the money $2,400 puts on a Friday is not for everyone. I acknowledge that. So I want to show you something that anyone can do. So this is a throwback back to the first slide. Call this the $100 Robinhood Challenge, and it should be called the unintentional $100 Robinhood Challenge. So here on Robinhood, I had about 10K in the account, and I thought I withdrew everything of the account. It turns out I didn't. I had left like $102 in there, or something, like an awkward number. It's like 102 or 112 or something dollars. And I was like, what am I going to do with $100? Do I just withdraw that and call it a day? I was like, you know what? Let me see what I can do with it in a month. So I kind of put myself up to a challenge that was unintentional. Most traders, fortunately, begin with more than $100, but this made it more difficult and a little bit more fun. So after 1 month, the $100 had gained 2,800%. Now the dollar amount, you know, $3,000 in a month, so-so, right? You're not going to blow anyone's hair back. That's not the point, though. Keep in mind, the point of to get to someone like to get to a large account. The way to get to a large account from a small account is this number here. If you are hitting percentage growth, you will get there. You will get there. And that is also the best and most reliable sign that you're being consistent. So the path to a large account from a small account is base hits and percentage growth. Here's an example of another trade that can be done on a small account. This is a net, and here, this is called legging into a vertical. The reason that you would do this is, one, to protect your profits on a day trade, and then two, if you have a smaller account, to not use a day trade. So on this trade, we made 40%, but I wanted to be able to hold it, right? So by being able to leg into the vertical, basically what that means is you buy a call or a put, doesn't matter. You buy an option. Let's say you buy a call, call it call one. Actually, you know what? Let's call it plus call. So you're long the call. It starts to go up, right? Now, normally, let's say it gets to your profit target. You sell the call. You call it a day. Well, the alternative is that you can sell another call against it, and you lock in the profits here. And now you've turned the entire trade into a vertical, which has a lot less risk overnight. So that's what I did here. Doing this doesn't use day trades. So if you have a small account, you can do these 100 times and you're not going to use any day trades. And that's kind of the point. So here we made 40%, locked it in, sold it the next day, and called it good. So here's an example of a chart that really did very well. And it was kind of a perfect example of everything singing together. And what I mean by singing together is you want to have all your indicators and your time frames kind of playing the same tune, right? If you think of it like a band, you know, if you have 4 people in a band, you want to have them all playing the same song. If they're not playing the same song, you're going to have just noise. And it can work that way in trading too. So here I call this is everything singing together. And this is what we're going to be looking for, this type of pattern in the class and then in the live trading. So we're going to be looking for something that has a longer term squeeze with smile structures. And keep in mind, we bought it, started buying it here, and here, and here. So this moment in time was the level where you want to do it. Right? You see how everything's kind of lining up there. You're starting to get smile structures. You're coming off of smiles, smile structure, coming off a smile, smile structure, smile structure. And you see how all these points in time align and look the same? Not only do you have a squeeze, but you have smiles on your momentum and you have bullish structure. What I mean by that is just your moving averages are aligned. That's what you want. If we can find this every time, that would be an A+ setup. So we had squeezes, positive momentum cycles on all time frames, multiple squeezes, EMA support, and guess what the result was? It was a huge move. Netflix went on to make a new all-time high, and it was a pretty sweet chart. So this is what we're looking for. This is an A+ setup. Here's another example. Different style, but I want to bring you guys different styles of trades. So this is on Clorox, not as exciting, I understand, but you can still make money in boring names. So Clorox had smiles across all the time frames and a developing EMA structure. This allowed me to do multiple hits or trades of this setup using different strategies. So the first trade was just a spread. It was slow, only made 35%, but we didn't really take any heat on it. So you can see the trade down there. I think we were in it for about 6 days. The second trade was a little bit more interesting though. The second trade was executed as a call butterfly. So keep in mind, when you hear call butterfly, think up, sideways, with time. All these things benefit you, right? So if it goes up and then trades sideways and then time passes, that's a great thing for the butterfly. That's when you really can make some profits. So here on the second trade, we got in at 319. Actually, notice this. We bought it at 255 originally, sold the spread at 350, at 47, at 922. 10 minutes later, we get in, or I got into a butterfly at 319, and then 10 days after that, we sold it for a little bit over a double. So even on Clorox, you can make a double. So let's look at another example here. This one's a little bit different because it didn't go according to plan right away. So here I bought Uber calls, and I bought it fully off of this. This was the primary chart. The daily was working really nicely. The weekly had a nice smile structure working on it. So I was like, yeah, let's play this 130. I bought it right here. Right? So I bought it right near that trend line, or that resistance level at 29. And you can see it was not a good entry. It was basically the top of the range. And guess what it did? It went right back to the bottom of the range. But check it out. It ends up basically, once it hits the bottom of the range, going right through the resistance and right to the sell target that I had. So why did that work? I like showing this one because it didn't go according to plan right away, but the setup was so good across multiple time frames. Not only was the structure good, which we're going to talk a lot about, but the momentum was aligned. And so even though my entry was not good here, it quickly recovered from a bad start and broke out, simply because the setup is good on multiple time frames. So if you can find that, it's a little bit of insurance, if you will. Here's a recent trade, just another quick one. Bought gold with the smile structures. And again, this was just a quick one from the triangle to the resistance and out. Here's a completely different style of trade. This is something I don't do very often anymore, but you can do it. certainly. But guess what? The strategy remains exactly the same. You just expand your time frames. So I call this one the garden/golf trade, right? If you like to garden, which, well, I can't say I like to garden. I've never gardened. But if you like to garden, this trade is your type of trade. If you like to go play golf during the middle of the day, then this type of trade is your trade. And the idea is you take the same strategy, all the concepts remain the same, you just shift your time frames to bigger time frames. So this is what I did on AG. I bought calls right here, and I purposely told myself I would not look at them for at least 2 months. I bought them, I think they were 4 months out when I bought them, and they were out of the money as well. So this trade was based on daily and weekly setups, right? No mentions of hourly here because it's a longer term. And I got out, let's see, I bought it here in the circle and I sold it here. So I didn't sell the high, right? But it was pretty much a no sweat trade. I got in, I got a chance to just be in a trade for months without having to worry or look at it too much. And then I sold my original out of the money calls. Now they were in the money and I took them off there. So this trade is good if you don't have the ability or the time to stare at a monitor all day. It's a set and forget type of trade. Here's another example, and I think this might be the last one. This is an older trade. This one shows the potential of the strategy when you execute it with an aggressive style. So this is on Costco. And here you can see how much I paid for this call. So this was an out of the money call on Costco. Paid 67 bucks for it. Bought it here. Again, you know, you want to buy it when it's at support, and this was a really good entry though. Squeeze, momentum, support. Squeeze, momentum, support. Bought an out of the money call. Real cheap, 67 bucks, or in options language, 67 cents. Sold it right here, and look at the percentage return. Turned $67 into 1,082, and the percentage return is a little over 1,500%. So this is a really powerful directional signal when it's combined with an aggressive strategy. Also, mind you that, you know, if this let's say this trade had not worked out, I risked $67 total for a really good setup. Fortunately, it worked out, but you can do this if you have the right setup and the right momentum. And who doesn't like making 1,500%? So it's really important to define your setup, and I'm going to ask that you do this in the class. That'll be probably one of the last things that we do and talk about, but I'm going to show you a lot of really interesting and cool things that I have found over the last decade that have been sharpened by my time here at Simpler Trading. But I really think that the best benefit is going to be when you understand the principles that we're going to talk about, but then you put it through your own filter and you make it your own. That's really where the edge is going to come for you. So I'm really big on that. So Netflix was an example of an A+ setup for all the reasons we talked about. However, not all traders have the same personality, right? I might take a trade off where you might stay in, and you might stay in where, you know, I would do something else, and that's okay. That's what makes a market. The best thing you can do is to learn a new strategy. When you're learning a new strategy, is to apply it to your own style, like we said. That's really where you're going to get the edge. And fortunately, this strategy works regardless of your personality type. So that's an embedded bonus. Take the proven strategy and make it your own. So let's talk a little bit about motivation. I've talked about the difficulty of trading, the challenge of trading, and I challenge you to embrace it. Right? Don't run away from it. Embrace it. If you're serious about trading, embrace the challenge. But part of that is also finding what motivates you. And this is a big question for myself: is what motivates me? What truly motivates me? So this is just a couple pictures that I took from my last trip to Vegas. I was there for a trader conference. I don't normally care for material things as much, but the front desk at the Paris was very nice, and they saw that I was there for the trading conference, and they upgraded me without me asking or wishing for it to be. They gave me the best suite in the building, and so a little bit of some views here from that suite. And we all like nice views, right? I mean, who doesn't? But there's probably something that motivates you a little bit more. And what is it? You know, what is it? I can't hear you answer, but answer it to yourself. What is it that really motivates you? And it's, you know what, it's okay if it's nice views. We all like nice views. There's something that motivates you more than anyone else, more than anything else. It might be family, it might be your personal freedom, it might be having nice things, or maybe it's something completely different. For me, it's animals. That's what I realized. And you might even hear me, you might even hear it in my voice as I speak about this. For me, it's animals. My goal is to start an animal sanctuary. I'm going to name it Amanda's House after the person who helped me embrace trading. And in the same way that maybe you can hear it in my voice when I just merely read the sentence, that's when you know you've tapped into something, right? So whatever your answer is, it should make you feel a certain way because you're going to need that. You're going to need that. You're going to have a day you're going to be down. You're going to get knocked down by the market. It's going to happen. It happens to all of us. You can't escape it. So you need something that will motivate you to see it through, get back up, dust yourself off, and get better. And for me, it's animals. I can't wait to realize this dream. So the big question, well, the big question is not actually what do you want from life? A lot of people go that route. It's not what do you want from life. The big question really is, what are you willing to be uncomfortable for? Simpler Trading has helped me answer that question, and I know we can help you too. So I'd like to close with just a reminder to you guys to never stop learning. One of my first trades that I placed was a big loss. I showed it to you. It was on Petrobras Apache. I bought the all-time high. I was in college at the time. I only had a $25,000 account. That was all the money that I had, you know, since my time working and everything else. Every penny I had was in that account. And those two trades cost me $8,000 in a month. They were only stock too, mind you. It was leveraged stock, but it was just stock. And it cost me $8,000 in a month. At the end of the month, I had less money. I had less time because I spent the month watching my loser. I had less ego because it certainly hurt my ego. I had less pride. It hurt. It hurt pretty badly. And maybe you've been there. Maybe you've been there. We all have. We all have. And there's only two choices after you get a lesson from the market, right? There's really only two choices. Either you give up or you get up and get better. That's it. It doesn't matter which one it is. It's fine. If you want to give up, give up. It's fine. Or if you don't want to give up, the only alternative is get up and get better. I've been there before. So I think I'm the right person to teach you what I've learned about becoming profitable along the way. And if we're lucky, we never stop learning. And that's why we're all here. So I'd like to talk to you guys a little bit about the class. The class will be on, the class is on the 13th. So it'll be not this Saturday, but the next Saturday. It'll be from 12 to 4. And we're going to cover everything that we've talked about so far. So we're going to go in depth on momentum, support and resistance, Fibonacci, Darvas, macro, which ties it all together. That's super important. I cannot stress that enough. I'm going to give you guys my FANG index, which I've talked about a lot in the room, and I'll show you here in just a little bit. I'm going to give you guys my checklist, my indicators, and my scans. So basically, the last decade plus of my work is going to be included in this class. I'm really excited to share it with you guys. And there's two different classes that you can sign up for. The basic class will include the strategy class, which will talk about everything that we've talked about in this presentation so far. We're going to go really in depth. We're going to show you how to use the indicators, when to use them, how to use them, how to execute the trade so that you put the Greeks on your favor, how to scan, basically how I go from start to finish. The basic plan also includes the trend and range oscillator indicators. So both indicators you saw on my chart, which are the smiles and the frowns, you're going to get that as well. I've gotten a lot of interest in that, and I'm really excited to bring that to you guys, mostly in how to use it, right? Once you guys are using this indicator, I look forward to hearing how it goes for you because I'm excited to share it. It's going to be really cool. You're going to get my market checklist, which we've talked about. You're going to get the macro session. Actually, sorry, for the pro, you get everything we just talked about. However, you will get a bonus live macro session, which we'll talk about a little bit more here in just a minute, which ties it all together, right? If you guys have spent any time with me in the room, you know how I try to tie things together and look at all the different pieces and how they all the levers move stocks. That'll be part of the macro session. And maybe most importantly here, with the pro, you get 2 days of live trading. So my singular goal with the folks that go pro is for us to make our money back with the 2 days of live trading. And then you have the education, the indicators, the checklist, the FANG index, and you pay for the class. That is my singular goal. So here's the basic package. We've talked about this. So it will include the indicators, the checklist, and the class. This is the market checklist. So let's talk a little bit about this. We've touched on it a little bit, and I think a couple of you guys may have seen it in the room. But I'm going to be sharing this with you. This is all the indexes that matter. This is all the bonds, the internals, the futures, and the sectors, right? And the goal with this is that you go through it every market close. It probably takes about 15 to 20 minutes to finish it, but it's more than worth it, because at the end of the day, what you're going to be looking at with your checklist is either a bullish picture, a bearish picture, or a non-committal choppy market, right? And regardless of which one of those it is, you now have a leg up going into the next trading day. It's really valuable. The pro package, like we talked about, includes everything, including the live trading. And there's really nothing more effective for learning a strategy than to actually learn it live, right? So we do this in the room all the time, but we don't really have the time or the ability to really get into the nuts and bolts, which we will do in the live trading. Like I told you guys, my singular goal with the folks that get the live trading is for us to make the class money back, and then you have the strategy, the indicators, the checklist, the FANG index, the scans, and the macro session covered. That is my singular goal with you guys, and that'll be on the June 16th and June 18th. We'll have one in the open and one in the close by design, so you can see the difference. Let's talk a little bit about the live macro session. So the live macro session, I think, is one of the most important things. It's going to be part of the pro package, and it's going to tie everything together that we will look at. It's really important to understand how it all comes to a point, right? So let me just kind of maybe visually do this with you guys here. So let's say you have indexes, volatility, bonds, and currencies. Why do I care about this stuff, right? I'm trading Amazon. Why do I give a damn about interest rates? Well, you'd be surprised. All this stuff here, the point of it is, by understanding all of it, it comes to a point. And the point is either bullish, bearish, or neither. And regardless of which one it is, you have a leg up. That's really important. So we're going to be doing that in a live macro session. And lastly, I believe, this will be the FANG index. So I'm going to be, I created an Excel document that's pre-populated. This I'm really excited about. I'm excited about this for myself, to be honest. But I'm excited to share it with you too, because I'm sure you guys are going to make some cool things and maybe you'll share them back with me. But frankly, I'm excited for myself on this because I've coded the FANG index. How cool is that? So the point of the FANG index, and I included the slide just so I could talk about it in this way. This is the FANG index. If you're in the gold room, you've seen it countless times. And you see the previous high right here? See how we're back at the all-time high? Look at when this chart got back to its all-time high. Right here. This is a daily chart, mind you. See how I got back to the all-time high? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days ago, it got back to its all-time high. The NASDAQ today, it happens to be today, it made a new all-time high. This indicator is leading the NASDAQ by 10 days in its current form. How cool is that? So if you had this indicator, you would have seen this hit an all-time high 10 days ago. What does that tell you? It tells you that the probability of the NASDAQ doing the same thing in a slower fashion, but still doing the same thing, is very high. This is a leading indicator, and honestly, it's the best one that I have found. There's no other index that you will find that is doing this behavior, this dynamic. It's a leading indicator, and it will tell you maybe a day or so ahead of time what the market wants to do. I think it's really cool, and the best thing is it's coded in the Excel document. So all you will have to do to make your own index is know the symbol you want to include, the price that it's trading at, and the market cap. And the formula does the rest. And then you just plug it into TOS like it's any other chart, and you'll end up with your own thing index. I'm looking forward to using it a little bit more because I'm going to make indexes pretty much for everything. I think this is really awesome, and it's so helpful. So I'm excited for myself, and I'm excited for you guys as well to get to try it out. So if you guys have any questions, here's my email address. Feel free to send me an email regardless of the question, good, bad, or ugly. Send me an email, sam@simplertrading.com. And I think this is a good time for some Q&A. So if you guys have any questions for me, let me know, and we will go from there. Sorry I didn't get to any questions during the presentation, but I know we have some great folks here. Thanks for being here, Sandy. Good night to you. Yes, the indicator is part of the package, regardless of which one you get. So you will get both indicators, which are very important for understanding trend or oscillations. I really couldn't trade without them. They're really good momentum indicators, regardless of the market, and you will get them with either the basic or the pro. Also, one more thing I want to tell you guys is the PayPal credit is available. So if you guys do have a PayPal account, you are able to cover the cost of the course, whichever one you choose, through the PayPal credit. And I believe they have a 6-month no interest plan. So my goal is to have us pay for the class in the live trading. But if you'd like to use your PayPal credit, that is available for 6 months without any interest. So let me just get through some of the questions here. What EMAs do I use? I use the 821 EMA and the 50, 100, and 200 SMA. How do you day trade with your indicators? So it's exactly the same thing as what we've talked about. It's all based on support and resistance. So you have to be able to find support and resistance reliably, either with Darvas, which is the horizontal previous highs and lows, or with Fibonacci. I'm going to show you both. And then the other half of it is you have to understand momentum. If you're day trading, it's just fine. The only difference when you're day trading versus longer term is you change your time frames. So instead of looking at a daily chart or a weekly chart, which would be more of a swing trade strategy, you would look at maybe a 15, a 5, a 1, and a tick, and that would be your setup. But the idea behind it would still be support resistance and understanding the structure of the chart, which we'll cover in depth. So converting to spreads at the end of the day did not flag the pattern day trading rule. No, it doesn't. The only way that you flag the pattern day trading rule is if you had sold the call that you bought, right? So what happened with that trade was I bought a call in the morning. By the middle of the day, it was up like 40%. I wasn't too sure it could keep going, so I was like, let's lock this in. So I sold a call, a different call against it, right? I don't remember the exact price, but let's say that I had the $20 call. In the afternoon, I sold the 25 against it, right? So in reality, the way that they're looking at it, it's two different trades. You bought the 20 call, you sold the 25. That's two different trades, and you didn't open or close either one. Or excuse me, you didn't open and close either one, so no day trade used. It's good if you have a smaller account. Robert, yeah, absolutely. We will look at when the trades don't go right. because you have to know when to bail, right? So we of course in the class have to discuss when the plan doesn't work, right? In anything, there's no one in the world has 100% winning percentage, and honestly, you really actually wouldn't want that. If you had I take that back. I mean, who wouldn't want 100% winning percentage? But in reality, the folks that have like ultra high winning percentages typically are making very small amounts on their trades, and the risk is usually asymmetric. But yes, we will cover when to get out, right? That's ultra important. It's not all about, always paying yourself. Sometimes you have to protect yourself. That is equally, if not more important. Keep in mind, it's risk before reward. So we will definitely focus on risk. It's not singularly reward. If you can protect your risk, you will get reward. But if you are not mindful of your risk, nothing else matters. So we will definitely focus on risk. Helen's excited to learn about the red line. I look forward to seeing you there, Helen. That'd be awesome. Looks like a couple of folks are excited about the class, signing up. And Mary, yes, if you wish to pay with a PayPal credit, that is available. Bill, yeah, the class is, as always, available for your review. So the way that it works is you guys get a folder. You will, of course, get the live feed with the class. But then when it's all said and done, you get the folder, the class notes, the indicators, the Fang index, Excel document, so you can make your own, or you can use mine. You get the checklist. The macro session is recorded. So, and anything that you miss, you can always go back and have access to forever. Would you say this is a complete system all its own? It is. It is. It's half my system and half of Simpler's, right? What you're seeing is not too dissimilar from what you see commonly used at Simpler, for good reason, right? I mean, there's a reason that a group of professional traders got together and came up with a system, because it works. I think mine fits really nicely into that. It's not dissimilar to what anybody else does at Simpler. We all use Fibonacci. We all use support and resistance, moving averages, momentum, the squeeze. So would I say it's a complete system? Yes, absolutely it is. And when you tie it together with the macro, it really puts the bow on it. Actually, since I'm speaking about the macro for the folks that are still here, I'd like to, at the end of this, go to YouTube or maybe go to Facebook on the Simpler Trading website. On Monday, I actually did a state of the market. If you're interested in getting a preview as to what we're going to talk about in terms of big picture and tying it all together and seeing how it plays out, now that it happened on Monday, seeing how it plays out at the end of the week, go back and check out that video. I think you will really enjoy it, and it's a preview of what we're going to talk about in the class. Where are you located? Simpler Trading is located in Austin. And what do you enjoy best about the team? What does the tribe imply? That's an interesting question, Taylor. I like it. What I like the most about the tribe is that we all make each other better. That's the goal, right? That is the absolute goal. And my goal is to make you guys better, and in turn have you guys make me better, right? And I get the same thing from Henry or Danielle or Jack or any of the other traders here. We all have a lot of experience, number one, and then we all have a specialty. And if you can take the best part of every person here, you will be quite solid. So my favorite part of being in this tribe is that we all make each other better, and that we're all consistently pushing. We were consistently pushing, and I like that. In my life, I have never been around people as animated about trading as I am, or as driven, around normal people. So I get in this group, and you guys included. You guys count as well, and I love it. I love being around driven, focused people. So that's why I like this tribe, and you guys are a part of it. Do I use any other indicators to go with the trend and range? Only the squeeze. And the reason that is because I've tried a lot of different things over the years, and I've narrowed it down to those two in terms of momentum. So in terms of momentum setups, I like those two, and I don't have room for anything else because it wouldn't be as good. One thing that I have considered is using the trend and range indicators that I have with the 10x bars. So if you guys happen to have the John's 10x bars, I think that would work well, but I haven't actually tested it. But in terms of other indicators, the only other one is the squeeze. What's the level of expertise and options required to make good use of the class? I'm going to work from the bottom up, Sushil. So I'm going to work from the bottom up. And here's what I'll say. If you take the class and you find that anything doesn't make sense, you have free access to me, right? As part of this, right? I really want to make sure, one, I will be completely open with you. My singular goal for the folks that get the live trading is for us to pay for the class. For the folks that get the basic package, my singular goal is for you to have full access to me so that you have the ability to put this together and pay for the class yourself, right? Because the basic doesn't include the live trading. I don't want to leave you guys out, so I will be available to you guys so that you can, because if you take the basic, you're saying you can teach yourself to fish. I appreciate that. I don't mind that approach at all. I think there's a lot of value in the live trading, and that's really the meat and potatoes. But if you take the basic, you'll have full access to me, and you can ask me anything. So we will get you there regardless of where you are. Judy wants to know, how do you lock in a profit when you sell something against it to avoid a day trade? Let me just quickly draw it out. So let's say that you buy a call, plus means long. That call goes up 40%, right? So now you're sitting on a 40% profit on the call that you bought in the morning. What do you do? Well, if it's at resistance or you don't think it's going to go much higher, you typically sell it, right? And then you bank 40% and call it a day. But if you do that, it uses a day trade. Now, that's not a big deal, but it might affect some people. So to get around that or kind of work alongside that rule, what you do is you hold this call. Once it's at 40%, instead of selling this call and taking on a day trade, you sell the call above it. So let me just give some arbitrary value. Let me say this is $10. This is 11. When the $10 call is up 40% and you're good to call it a trade where you would normally sell it, instead of selling it, you then short this call, and that locks in the profit. Then you now have a 10, 11 vertical instead of just a 10 call. And you can see how that would reduce your risk and lock in the profit on the 10. And then guess what? You just hold that overnight. And if your goal was to sell it, you just sell it in the morning. There's other ways to do it, but this is the easiest way. How do you determine the FANG index was leading the NASDAQ by 10 days? Well, let's take a look at it ourselves. Pull up the QQQ Woodstock and tell me, when did the Qs hit the all-time high? I'm going to cheat and tell you the answer. It was today. So the Qs hit the all-time high today, which is circled. When did the FANG index, which is what you're looking at, hit the all-time high? Right here. So the QQQ got it here today, literally today. You can pull it up today, and it'll even flag it on your charts. It'll say all-time high or high. So the Q got it here today. The FANG index got it 10 days ago. So the point of it is that you see what the FANG index is doing, and you can, with regularity, assume that the NASDAQ or the QQQ, which is tradable, will do the same shortly thereafter. It's awesome. There's a reason I talk about it all the time. Good to see you, TK. Good to see you. Awesome. I look forward to seeing you in the class. That's awesome. I remember you from the room. So thank you for being here. Enjoy the rest of your night. Noel Doug, another name I recognize. Good to see you, my friend. If you can attend the live session, will Duncan be available if you have an issue loading the indicator? Yeah, Duncan is always available to you guys, and he's on top of it. So if you ever need Any technical assistance? Mr. Duncan is your man. Joe B. So I'm going to answer your question here about the FANG index. So Joe B wants to know, why don't I do it from a Google Doc and it can pull it automatically? I had that thought. Here's why it really would be, and you can, I suppose, but here's the rub. Keep in mind that when you change a formula at all, even a decimal place, or let's say you add a 0, or you do any minor change to a formula, that gives you a brand new chart on TOS. So if the price of Apple in the formula is, let's say, 320, and then it goes to 319, and it dynamically were to update like you described, it would give you a brand new chart, and all your annotations would be gone. So is there value in having it live? Nominal, right? The point of the FANG index is really just to have a big picture view. And I'll talk about it a lot more in the class. D. Sligger, FANG index, if it's the strongest on the way up, how does it work on the way down? Exactly the same. The strongest things go up first, and the strongest things go down first. So when you see it crack, you can assume the rest of the market's going to follow. MT, I remember you as well from the room. Thank you for being here, my friend. What is the main difference between your indicator and similar indicators like MACD, Slowstoke, etc., Moxie? Well, I've used MACD before. So before I started with Simpler Trading, I did used to use MACD. Here's the thing. The MACD breaks down in sideways markets completely. It will be useless to you when the market goes sideways. By design, it is a trending indicator. So typically you would have to default to another one. What I like about mine that works, in my opinion, better than the MACD is it does everything the MACD does, but it doesn't fall apart if stocks start trading sideways. Now, it doesn't work as well, right? And that's the point of the other indicator. Keep in mind, all indicators will have an Achilles heel that will have to be filled in by another one. So that is a case. So one is trend, one is chop, and you have to be able to discern which one. But what I found with my momentum indicator, which would most closely relate to MACD, is one, in my opinion, it works better than the MACD for trend. So it does what the MACD does, but better. And then when it's not trending and the MACD would normally fall apart, the indicator still works. So it's better at the job that the MACD is designed for, and it doesn't have the weakness of the MACD in the wrong market. Is the class suitable for overseas members with different time zones? Yeah, Chris, absolutely. So the best part is, I don't know where you are, but you'll have access to the recording. And then you can have access to me as well via email or in the room if you happen to be a member. So you can ask me questions regarding anything. You'll have the class folder available to you pretty much forever. So if you ever want to catch back up on the class or the live trading, everything's pretty much recorded. The macro session, so you'll have access to it indefinitely, and you can watch it wherever you are in the world. What size account do you recommend for your style of trading? Well, that's a tough question to answer. I would say start with whatever you are comfortable with is really the best answer, because the whole point of what I showed you guys was I took, I grew $100 by 2,800%, which is not easy to do, right? $100 doesn't give you any room for error. If you mess up once, you're done. So, the whole point of it is, you have one chip and you have to grow it into 100 chips. How do you do that? Well, you have to double it a lot, and it doesn't leave any room for error. So I was able to grow an account from 100 into a respectable amount in a month, just kind of on the side. So I would definitely say more than 100 would be ideal, because you don't want to put yourself in that situation. But it's a personal question. I would say this: the strategy works with any size account, and I prove that. So I would say just whatever you are comfortable with, we'll work with that, and we'll take appropriate risk also, right? If you just have a $1,000 account, I'll show you how to take appropriate risks so that you can structure trades as if you had a larger account. Thanks for being here, Daniel. Will you need to be able to day trade if you live trade? No, Brian, you don't have to, not at all. The whole point is that you will apply the strategies to your personality, right? So I'm not going to change your personality, nor do I want to. I want you to embrace who you are, and if you are a multi-day swing trader, then that's the application of the strategy. I'll just show you the time frames that you'll use and the parameters that you'll look for to trade your style. But at the end of the day, it's going to be your style using some of the foundational stuff that I'm going to give you guys. Is the ETF leading indicator included in both packages? That's a great question. Since it's my class, I'm going to say yes. I don't have the answer to that fully, but I made the damn thing and it's my class, Ken W. So I'm going to say yes. So regardless of which one you get, you'll get the ETF formula. What is Darvis? Mimi, Darvis is just a fancy word for support via highs and lows. So let's say you have something like this. You'd have different levels. Each previous high, each previous low would work as a what I'm just collectively calling as a Darvis level. It's a term that I borrowed from Raghi just because I think it describes the horizontal support and resistance pretty well. Tourism Tim, if you're new to simpler trading and squeezes, will this be too much of a stretch? Here's what I'll say, Tim. If you think it will, I don't think it will, because I think I have a pretty good way of explaining things regardless of where you're starting from, without, so in a way that, if it was John in the class and a brand new person in the class, they would both get something from it, even though they have 30 years of experience difference. So I do pride myself on that. So I'm going to say no, but I'll answer you in a different way. If you would like to find out more about what we're going to talk about and the style and the approach, go to the Facebook, Simpler Facebook. So just go on Facebook, go to Simpler Trading. And then one of the most recent posts from Monday is a live video of me doing the state of the market. Watch that video. And if you like it, if you follow along, if you find it helpful, that's exactly what we're going to be doing in the class. I think it's some of the best work that I put out there. So hopefully you get a chance to check it out. The main things for an A+ structure is squeeze, momentum, support. That's pretty much it, Shaw. That is pretty much it. The only other thing that I would add to that is understanding the macro, right? Doing the checklist ahead of time and understanding you might be trading Costco stock and you'd be completely correct. That would create an A+ setup. The only other thing I would add is understanding the big picture so that you know that, okay, Costco looks great, but do the indexes and volatility look great too? If they do, then you have a trade. What platform do I use? Toss and Tastyworks. Will your system work if you're starting with a $2,000 account? Well, Gary, I showed you a slide where I started with 1/20th of what you started with. So I would say yes. Sean in Ireland, I think I owe you a book if you're the same Sean. I don't know if you are, but I think I might owe you a book, Sean. Signed by John. So hopefully I get a chance to see him soon and I'll send you your book. With your stuff, do we need to have the new Squeeze Pro or could you stick with the old one? You can stick with the old one, absolutely. I think there's a lot of cool nuance in the Squeeze Pro. I personally wouldn't want to go back, but at the same time, the old Squeeze or the classic Squeeze, if you will, is built into Toss and it's free. So if that's one you're using, same idea, same exact idea. John G, thank you for being here, my friend. I'm happy to see the name. Good seeing you here. Enjoy the rest of the night. Don't do anything I wouldn't do. Thanks for being here, SP. It looks like a lot of folks are excited about the class. I'm excited that you guys are excited. Like, I get to take 10 years of collective knowledge and brain dump it on you guys. And the only thing that I will ask back is that anything that you guys find, send it back to me. Share it with me. Let's make this a virtuous thing, right? I show you guys something, You guys take it, grow with it, and then send it back to me and show me something. That's how we all get better. That's the point. Do I go into end of day trading as well? Yeah. So part of the um, one of the live trading sessions is actually going to cover the close. So one day we're going to do the open together because that's a different dynamic, and then the second day of live trading we're actually going to do the close. So you'll see both ends of the day. In the middle, it's kind of whatever, but the dynamic is different at the open and the close, and we're going to cover both of those. B tags, the formula for the FANG index is shared and it will be part of the class. $6 million man, yes. If you want some of the macro stuff, I've already done it. Actually, you can check it out on Facebook. Like I've been shouting it out. So if you guys get a chance later tonight or whenever you get a chance, maybe over the weekend, go on Facebook, Simpler Trading, and check out that video. It's really in depth, but it's explained in a way that's relatable. And I think I do a really good job at the end of tying it all back into the trade. Right? I start with all these different pieces, but then I show you how to connect them all. And really, once you understand how it all connects, you can't unsee it. Right? Once I show you how it all connects, especially if you weren't someone that was focused on macro at all, it's one of those things. Once you see it, you can't unsee it, and you're going to ask yourself, "How did I ever do this before?" So check that out if you get a chance. What if you're not familiar with Fibonacci? Well, you'll be more familiar after the class. we'll cover that. I won't leave you guys hanging. We'll cover everything in the class step by step. Rubberhead, what's the best way to grow a small account? Many trades, a small percentage, or holding on to each trade and milk it for what you can? Well, the best way to grow an account is to take each trade for what it is, right? So if I were to tell you to try to hold on to every trade, that's probably not the right strategy. I would say that I'm going to show you when to potentially see that the trade is no longer going to be working or when the trade is going to start working. And then when you see that shift, you get out. So I don't go into any trade thinking I'm going to do exactly this, right? I try to stay adaptable and flexible and control my risk at the point of entry. So that's the beautiful thing about options is you control your risk when you put on the trade. And if you do that, then you can kind of adapt around that. Thank you, Tammy. Good to see you here. Enjoy the rest of your night. I'm excited to see you for the class. Can't wait to dive into this stuff with you guys. Mikey Z, another person from the room. Thank you for being here, my friend. The title of the YouTube video, if you want to check it out on YouTube, it is there too. It's called State of the Market. So if you just go to the Simpler Trading YouTube page, it's called State of the Market. And I think it's a good preview, right? If you're asking yourself, well, like, do I really need the macro? Do I really, do I really need that? Watch that video. You'll see how it all ties together really nicely. And not only that, but I did it on Monday. You get a chance to see how it played out for the rest of the week. Jasper, another name from the room. Thank you, guys. I love seeing the gold room, folks. Thanks for being here. Have a great night. Taylor, you as well. Enjoy the night there in NYC. Yes. So Ken W. Yeah, the ETF, make your own ETF will be included, and I'll make sure it's included in both. Selena, the class will be available. So, if you want to build up a little bit more, let's say you want to kind of get a little bit more experience under your belt, if you feel you need that, definitely, then the class will be available to you whenever you wish to partake. If you want to do the live trading with me and be able to ask me questions, that will be recorded. So, just take that into account. But if you decide to maybe do it in a month or whenever you decide to do it, it'll always be there for you. And whenever you decide to do it, send me an email, and I'll make sure that, that I stay with you along the way. Robert E., yes. I only trade with these indicators, and I trade both options and futures. So yes, regardless of what you trade, like I said at the beginning of the webinar, option stocks, futures, or marshmallows, it works for all of them. Yes, Sushil, you have full access to me, my friend, and I mean it. You know, I take this stuff very seriously. Hopefully this comes across. This is I get to live my dream, and I don't forget that, right? And I'm very lucky to have to be here. Granted, I did a lot of work that is now has the appearance of luck, but I fully recognize I'm very lucky to be here, and yes, so I take nothing for granted, including especially not you guys. You know, you guys are hanging out with me on 8:30 on a Thursday. I don't take that for granted at all. So you have access to me as long as you need it. SH, did you say Fang Index or Shane's Index? No, I'm not that arrogant, SH. It's Fang Index, like the Fang stocks. That's hilarious. Although if you want to call yours the SH Index, I won't have any problem with it. Thanks, SB. Thanks, John and Paul and Andrew, Rubberhead. Good seeing you guys. Well, Woodstock, I wouldn't go that far. So Woodstock just said the FANG index is a 10-day leading indicator for the Qs. I would not say it like that. I would say in this instance, it led the Qs by 10 days and it preceded the Qs to the all-time high. What I will say about the FANG index, I wouldn't put a number on it. In this instance, it was about 10 days. I will say that it is a leading indicator. So what you see happen on the FANG index on Monday, you'll see happen in the stock market on probably Wednesday. Good to see you, Gus. Can't wait to see you in the class, my friend. Have a great night. Yeah, Gray. So Gray wants to know, am I teaching how to find the trades? Yes, that's a huge part of it. That's a huge part of it. So you're going to get the scanner that I use. And part of finding the trades is we're going to do a checklist together, right? So basically, I'm going to show you guys and walk you through the process of getting into a scan and then turning the scan into a trade. And not only that, but then how to execute the trade. So there's three parts to every trade, right? There's finding the trade, which is scanning. That's the first part. The second part is finding whether you want to trade that thing that you found or not, right? Does it have a setup that you like, that makes sense? And the third part is the execution of the trade. You know, how exactly do you go about structuring the trade to take advantage of the thing that you saw in point number 2? So 3 parts to a trade: scan, let's call it directional focus, and then execution. And we're going to talk about all 3. When do you do the macro analysis? Esther wants to know. After the market is when I do it. No, it doesn't really matter when you do it. I find that it's easier for me to do it after the market, and then I just kind of let that marinate in my subconscious overnight for the next morning. If you like to wake up early before the market and do it, I could probably get through my checklist in about 15 minutes. So it doesn't really matter. My personal preference is to do it after the market close. Sean in Ireland is waiting on his book. I'm waiting on society to return back to normal so that I can see John and have him autograph it for you. I'll figure it out, Sean. I don't think society is going to go back to normal anytime soon, but I will. I'll see if Mr. Carter can maybe autograph it, send it to me, and then I will send it to you. I still have your address, and I haven't forgotten. Thanks, Judy. Good to see you here. Have a great night. Awesome to see you, Woodstock. Have a great one, my friend. I'll see you in the room tomorrow. Trevor, awesome. Love seeing you guys sign up for the class. I can't wait to show you all this stuff. If you have any questions between now and then, you have my email address. The class is going to be on the 13th. It'll be on a Saturday. All right, guys. Looks like we're getting to the end of the questions here. Selena, very good to see you. Good night. Have a great one. Yes, trigger shy. The class will include the full 4-hour class, full dive into the strategy. Honestly, I might go over 4 hours. I hope that's okay. The indicator sets and how to use them, right? That's the most important thing, how to use them. The checklist, which I find invaluable. The FANG index, so like the FANG stocks, FANG index, so you can make your own ETF or leading indicator. And hopefully, if you make a good one, you share it with me. The live macro session, and then the live trading. All right, guys. I think we've gotten to the end of the questions. Thank you very much for being here, guys. I always appreciate it. I know it's 8:30 on a Thursday, and you chose to be here. I don't take that lightly. I'm very appreciative of that. And I'm not just going to say that. I'm going to show it to you. So if you guys are in the room, or if you decide to sign up for the classes, you will get my best. And I'm very excited to show you that. It's 10 years in the making, and we're going to have some fun, and we're going to make some money. So thank you again for being here, guys. Have a great rest of your night. Have a great evening, and I will see you when I see you. Cheers, guys.